Imagine this. You've just sold your entire house, not for a new, bigger house, or to move to a sunny island. You've sold it for a single flower bulb. Sounds insane, right? Well, in the 17th century Netherlands, this was a reality. Welcome to the story of tulip mania, arguably the world's first speculative bubble and a wild lesson in human psychology. So, how did a simple flower from the mountains of Central Asia cause an entire nation to lose its mind? Tulips first arrived in the Netherlands in the late 16th century, and they were an instant hit. They were exotic, beautiful, and unlike any flower the Dutch had ever seen. But certain tulips were special. A non-lethal virus, the tulip-breaking virus, would infect the bulbs, causing their petals to burst into stunning, flame-like patterns. These broken tulips were incredibly rare and couldn't be reliably reproduced. You might plant a bulb hoping for a beautiful pattern and get a plain, solid-colored flower instead. This rarity made them the ultimate status symbol for the wealthy Dutch elite. Think of it like a limited edition sneaker drop or a rare piece of digital art today. Having a unique broken tulip in your garden was the 17th century equivalent of flexing on social media. The most famous of all was the Semper Augustus, with its striking white petals feathered with deep red flames. At the peak of the mania, a single bulb of this variety could cost more than a grand Amsterdam townhouse. Merchants, artisans, and even chimney sweeps all wanted a piece of the action. This is where things started to get really crazy. A formal market developed for trading tulip bulbs, complete with futures contracts. People weren't buying the bulbs to plant them anymore. They were buying them purely on the speculation that their price would keep rising. They would buy a future tulip, a promise of a bulb to be delivered in the spring, hoping to sell that contract for a profit before they ever had to take possession of the actual flower. This is what we call a speculative bubble. The price wasn't tied to the tulip's real, intrinsic value. It was driven purely by the belief that someone else would be willing to pay even more for it later. Stories from the time are legendary. Sailors who accidentally mistook a priceless bulb for an onion and ate it for lunch. Weavers who traded their looms, their very livelihood, for a single bulb. People were leveraging their homes, their businesses, and their life savings to get in on the tulip trade. For a short time, it seemed like everyone was getting rich. The price of tulips skyrocketed by thousands of % in just a few months. It was a national frenzy, a get-rich-quick scheme that seemed too good to be true. And as we all know, if something seems too good to be true, it usually is. The crash came in the winter of 1637. It happened suddenly, in the city of Haarlem, at a routine bulb auction. For the first time, buyers just didn't show up. Or perhaps a big seller tried to cash out, and there were no takers at the astronomical prices. The exact trigger is lost to history, but the effect was like a dam breaking. Panic set in. The news spread like wildfire. Everyone who was holding onto these incredibly expensive bulbs or futures contracts suddenly realized they were sitting on a ticking time bomb. People rushed to sell, but there were no buyers. The price collapsed. In a matter of weeks, bulbs that had been worth a fortune were now worth almost nothing. The market simply evaporated. Fortunes were wiped out overnight. People who had sold their homes and businesses were left with nothing but debt and a handful of worthless flower bulbs. The dream of easy wealth turned into a nightmare of financial ruin. Now, historians debate the true extent of the economic devastation. Some argue it wasn't a full-blown national crisis but was confined mostly to a specific class of merchants and speculators. But the story itself became a powerful cautionary tale, passed down through generations. It's a perfect illustration of what economists call the greater fool theory, the idea that you can make money by buying an overpriced asset as long as you can find an even greater fool to sell it to at a higher price. The problem is, eventually, you run out of fools. So, what can we learn from a bunch of 17th century Dutch flower traders? A lot, actually. Tulip mania shows us that human psychology, greed, fear of missing out, and herd mentality is a powerful force in any market. We see echoes of it throughout history, from the South Sea bubble in the 18th century, to the dot-com bust of the late 90s, and even in the wild volatility of some cryptocurrencies and meme stocks today. The technology and the assets change, but the underlying human behavior remains remarkably consistent. The story of tulip mania is a timeless reminder that when everyone is shouting that you can't lose, that might be the exact moment to be the most cautious. It's a lesson about the difference between investing and gambling, between intrinsic value and speculative hype. So the next time you see a market going parabolic and feel that FOMO kicking in, just remember the story of the Semper Augustus tulip, and how a beautiful flower once brought a nation's economy to its knees. Thank you so much for watching. It's fascinating how history can teach us so much about our own world, isn't it? If you enjoyed this deep dive into the past, please hit that like button and subscribe for more stories like this one. We'll see you in the next video.